You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Well, hello again. Welcome to Talking Real Money. Don McDonald here, Tom Cock over there, you out there, and you're concerned about money. We know you are, because you deal with it all the time. You make a lot of mistakes with it. You get some bad advice. You want more of it. You don't want to take a lot of risk. You're trying to walk that tightrope between risk and return. You want to build a better retirement. You want to take care of your family. I don't know. You want to be less confused? That's why we're here. Call us. 855-935-TALK to talk about all the money issues that really matter in your life. Now, during the top of the hour, walked out to get my mail. And inside my mailbox was this box. I have not opened it yet.
This holds the key to the future of U.S. stock markets. I have not
opened it yet. It is addressed to Don McDonald.
Yes.
Or
current
current VIP winner.
Oh, very personal. Very personal indeed.
So it says verified package delivery, special delivery. Except it's bulk mail postage. All right. So,
and you know what that is? It's a key to a room on Carnival Cruises leaving next week from beautiful Miami, Florida. Have a nice trip.
I have not opened it yet. I'm opening it live here on the show to see what I got.
You know, we haven't seen this sort of suspense since they opened, Al Capone's safe, right?
Wait, oh my gosh, you're right. It's a key.
Is it a shot?
It's a key. Okay. It's a key right there. Look at that. It's a key.
Oh, it is a key.
It's a key.
That's
and what's
a car key of some kind.
It is. I am a.
You gotta go bring it down and
I
try.
love this.
You gotta go try the car to see if it'll start.
It says, "Congratulations, Don McDonald."
Yeah.
It's printed right there. Don, you guaranteed winner. Could be you.
What time's the stake dinner?
No, wait. Guaranteed winner could be you.
Be. Wait a minute. Guaranteed could.
Call the gifting department immediately.
Oh yes.
The gifting department. Oh, I don't know what they're selling, but I have definitely won 2 gifts, either a
car,
a 2021 Ford F-150, an Android touchpad tablet, a 70-inch Samsung TV, an Apple iPad Air, or $500 Privileges travel savings card. You were right.
Yeah,
it's some sort of a travel scam or something. All right.
Yeah.
All right.
Sounds good.
Watch this key. Here it goes.
Listen, here's the thing. Save Don from his trip to the Bahamas or something, or where we're going to go.
Yeah, I could practically swim to the Bahamas from here.
I know. And who doesn't want to jump on a cruise ship right now? I mean, everybody's just like, let's go. Give me 2 or 3 shots before I might even consider walking down by the wharf. Anyway, your money, your questions, please call us. You didn't even give the number yet, did you?
I did. 855-935-TALK.
I tell you what, it's fascinating to me that the talk right now, and we heard it a little bit last hour, it starts with a B, ends with an E, bubble. Bubble, bubble, bubble. Stocks are in a bubble. Why would you invest in stocks markets today? And then I think you got to go back and think about the basics.
Yeah, the basics of
First
bubbles.
What is
soap, water?
My grandsons will be over later for that. Okay. Tell us what a stock is. What is a stock?
Really? two pieces of wood with holes in them, 3 holes into.
Yes, I know what you're used to, but that's it. I got my tomato waiting for you to be locked up in it.
And I don't think a lot of people get what stocks are.
No, I don't think so.
And I think this is a great topic.
Wild and crazy stock market. It's all in the back room and it's smoke and there's no transparency and nobody what's going on. And I'm sort of putting my money in hoping it works. But if you understand what a stock is, what? How would you define it?
A stock is a measure of ownership of an actual company. a business.
And that's why that's why it can be interchangeably called equity, because you own a part of something, whether it's Starbucks or
you have
Tesla
an equity
or
interest.
Boeing, equity interest.
Now, bear in mind, if it's a big company, your stock is a tiny little fraction of the company, but it's stock. You own a little smidge of it.
But when you invest in stocks, you're investing in
businesses.
Companies,
right.
businesses,
right.
the economy, in to some extent, capitalism, right?
Well, if you're investing in a stock, you're investing in one company. If you're investing in a few stocks, you're investing in a lot of companies. If you invest in all stocks, you're the economy.
Yeah, and this is the part that people forget. So, because when they get nervous about stocks, I say you're exposing your money to thousands of businesses around the globe. Right? I mean, you're putting it a little tiny bit in Amazon, all these things. And over time, that exposure has meant increased value. In fact, I just looked, 100% stock portfolio this year, up 5.5% this year.
2020,
not saying that's
2021?
2021.
Wow.
It's been like 3 weeks of trading.
That's a lot.
I mean, and I'm not saying that's going to continue as meaningful, but that's the point. We don't know. And should you be in stocks, we can take that up.
Well, we're going to take that up. And I also want to take up the issue of risk, because when we talk about stocks, people think, oh, very risky. And in some ways, yes, but in other ways, maybe not. 855-935-TALK. Call.
Tom and Don are talking real money.
Learn about estate planning, Medicare, Social Security, senior housing, investing for retirement, generating income in retirement, and protecting yourself from consumer scams, along with a special keynote duo, Paul Merriman and David Booth, the founder of Dimensional Fund Advisors. Reserve your free place now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
Yeah, somebody called, wanted us to explain what bonds are. We can do that really quickly. A bond is a debt. It's a debt obligation. It's an IOU from a company. You don't get to participate in the growth of the company at all. They just promise, cross their hearts and hope to die, that they will pay you back whatever you gave them with interest over a period of time.
See General Motors, see Enron, see World. I mean, this is why we suggest when it comes to bonds, IOUs, you use U.S. government debt because they've always paid you back.
They tend to pay it back. Whereas we were talking about stocks and how they make money, and individual stocks, you don't know whether they're going to make money or not. You just can't know that. You can only guess. But here's why we suggest global investing, because looking back in time, and people have actually done it. As a matter of fact, I found a source that looked at the global world economy in 1 AD. 1 AD.
It was roaring. I can remember that. It was a big year.
It
a lot of trade.
It was $18 billion was the total value of the global economy. Today, the total value of the global economy, or actually the end of 2019, $88 trillion.
So it's increased a bit.
That's some kind of growth.
Yeah. So when you put money in stocks, you're betting on the growth of those economies. You're betting on companies being more efficient. You're betting on sort of the future, as I say, of capitalism. Mm-hmm. And by the way, when people want to argue about that, I say, if you don't like that, there's only two places I know where you can really go to make a bet against that. I think it's North Korea and Cuba, generally.
North Korea, Cuba.
Yeah. They don't have capitalist.
I think that's all.
Economies.
I think that's really pretty much it. Even the big communist countries came around. Russia, China, they came right around. Indeed, all righty. Anyway, 855-935-TALK is our number. You want to know how things work? Call us. We'll explain it. We promise. We'll try to make it easy, too. 855-935-8255. And, John, it's your time.
We lost
Welcome.
John.
No,
we lost John.
No, we have John. We lost Georgia. John, welcome to Talking Real Money.
Oh, pardon me.
Thank you. Thank you, fellas. Enjoy listening to you. Yeah, got a couple questions. I've been in the market for some time, quite some time actually, and but I'm more concerned, or my question is regarding mutual funds. I'm looking to set up accounts for my grandchildren, custodial accounts, and so I'm wondering if you have any advice. But I'm to give you an idea. Do you mind if I mention the name of the mutual fund company?
No,
that
sir,
I'm
not a
looking at?
bit.
Not at all.
Not a bit.
Okay, Mellon, Bank of New York, Mellon.
Oh, BNY Mellon, yeah.
Of course.
Right. Yeah, and so I'm looking at a couple of their funds, and one of the reasons, well, not only one, but I personally have been in the appreciation fund for quite some time, and it's done quite well. But I'm looking because they have a minimum of $1,000 for the investment for the custodians. So the question that I have, when you set these up, I'm in my 70s. Should I be the custodian, or should I assign my children as the custodian for the grandchildren?
Well, okay. Here's the custodian really doesn't matter all that much because you can have a successor custodian named in your documents. But
okay.
How old are the kids?
They range
Grandkids.
from 5 up to the oldest is just past 18, so you can't set that up for them anymore. My understanding is in the state of Washington, 18 is the maximum
Age
you can go
majority.
with these.
Yeah. What's the purpose of giving them the money? What do you expect them to use it for?
Well, I'm setting it up as, I can't remember what it's something.
UGMA, Uniform Gift to Minors
Yeah.
account.
Yeah. But whether they use it to go through school or whether they use it to buy a car, that's not my business.
You don't
They can
care.
do whatever they want.
Okay.
with it. No.
Okay, good. You understand the meat of it then, that that they can do whatever they want once they reach the age of majority, unless the custodian just forgets to tell them about the money, which I don't. I think that
does happen
sometimes.
from time to time.
But let me try and dissuade you a little bit on the BNY Mellon.
Okay.
Those are really expensive funds. And
you said he was in the capital appreciation.
he's in the.
fund?
I'm
What's
looking
the
right
expense-
at the Mellon
What's the
appreciation.
expense ratio? What's the expense ratio on that?
0.6% for basically a blue chip stock fund. And
Yes.
and you could get them, and you say the big benefit is the minimum of $1,000. But what you could do is set up a brokerage account with Fidelity or Schwab or whomever, and put $1,000 into VT, which is the Vanguard Total Market Index, which gives
Total
them
World Market.
total world. It gives them 8,800 stocks around the world, massive diversification, as opposed to this BNY Mellon fund, which has 49 stocks in it. 49.
And you're making a bet on large U.S. stocks, which have been the best place to invest the last 10 years, but have not been over the long haul.
And this one is heavily weighted large U.S. growth, too, which has been the hot place. But going forward, history says it probably won't be. That hot places switch around, and that's why we believe in diversification. So I would suggest you open a brokerage account. If you name you or one of your children as custodian, I don't really think it matters. You can have a successor custodian. But I would suggest another investment, even though you have done very well with it. I'd rather see you diversify like crazy for the kids.
Okay, let me ask a question. I'm already in E-Trade. I have my stocks and I'm set up with E-Trade, so I assume then
good.
that I can set this up with E-Trade.
Yep, you sure can.
Yeah,
The
absolutely.
VT Vanguard, that's total. Is that global as well as U.S. or?
That's global. It's U.S. and international. It basically owns every publicly traded non-micro cap stock in the world. It comes really close.
Yeah, there's a few things they don't own in emerging markets and other places that are
emerging
not
and
so
micro-cap,
liquid,
but
because they had a liquidity issue.
They own
But yeah.
a lot of stocks, and the kids are going to have a great diversified portfolio. And then somewhere along the way, Grandpa ought to write them a little note saying, if you're smart, let this thing ride, and show them how much it might be worth if they let it ride until they're 65. They could be worth hundreds of thousands of dollars.
And John, I want to say that's a great gift, I think, for a young person, because
Absolutely.
it's two parts. It's the money, but it's also the lesson. As you just said, John, it's the lesson.
Oh, and
that's beautiful.
John, one more thing. For the 18-year-old, does the 18-year-old have any earned income whatsoever?
Yes.
All right. Give the 18-year-old a Roth IRA.
Put it in a Roth IRA, then it grows tax-free
For life.
comes out. That's a lot of years. You imagine all those years? A long time until that money comes out and doesn't have to pay tax on it. I think it's absolutely fantastic.
Okay. Well, just briefly, and I don't want to take too much of your time, but what are the exchange traded funds with the mutual funds? They're now getting into that.
They've been into it for a long time. They're now about 20 years old on ETFs. They're really just a mutual fund that trades throughout the day. They have incredibly low expense ratios because they're easier to manage, better tax efficiency, and it's really basically just the same as buying the Vanguard Total World Stock Index Fund.
Tom and Don are talking real money.
Now everyone can meet the retirement of their dreams at Retire Meet America 2021 online. Sign up now for free at retiremeet.com. That's retiremeet.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Questions for us? Call us with them. 855-935-TALK. I'm Don McDonald. That's Tom Cock. This is Talking Real Money. You can call us during the show. We'll answer them like we can talk, like have a conversation. Or you can call it in at another time, leave the question, and we'll answer it during one of the future podcasts. You can also go to talkingrealmoney.com. Just type it up and type your question at talkingrealmoney.com like a whole slew of people have done in the last week.
And you can chat, tons. By the way. You can go do chat.
Not with us.
Well, you chat with someone like us.
Yeah, but not
similar
with
person,
us directly.
Same organization. Okay.
All right.
Fair enough.
Anyway, so we got a lot of questions. Since last week, we've got a ton of questions emailed in or sent in. Yeah. The first one is the subject, Tom, where to put cash now. The question... We've inherited $400,000 that we would like to use to build a second home in 2 to 3 years. Where would you recommend we put cash for that time frame?
I would put it in the Vanguard Short-Term Investment Grade Bond Fund, VFSTX.
Vanguard Short-Term...
V as in Victor, Investment Grade Bond Fund. V as in Victor, F as in Foxtrot, VFS as in Sierra, T as in Tango, X as in X-ray. The Vanguard Short-Term Investment Grade Bond Fund.
Let me modify his question or his answer ever so slightly.
Yeah, go ahead.
That is if you want to be pretty close to sure that the $400,000 is there.
It could go down a little bit in the next 2 years. It could go down a little bit. Sure, yeah. Mm-hmm.
But you will make very, very little. 1%.
It's yielding. It's yielding a little over 2 right now.
Okay. Yeah. You're not going to make a lot. So just bear that in mind. But it's reasonably safe. It is not absolutely safe. But absolutely safe, you're down around 1. That's where you're going to be with absolutely safe investments.
Yeah, I'd even say lower than that. High yield savings accounts are 0.5%.
Right, but what you could do though is do a 3-year CD and you might get 1.25.
Oh, that's true. Yeah, if it's 3D, 3 year might work. Yeah.
On the secondary market, maybe, or anyway.
And if that doesn't work for you, I'd put it all in Tesla. Not a problem. No, kidding.
Let's see. We'll take a call now, I think. Yeah, let's take a call.
Oh, okay.
Yeah. Well, I was going to do another written-in question, but no, let's do a call. Jerry, you're up next. Welcome to Talking Real Money.
Hi, Jerry.
Yeah, this is Jerry.
What's up?
Hi. Got $100,000 cash. I'm about 68 years old, and got a little bit of vacant land in and around Seattle. Got a couple of houses that are almost paid off. So you can see I'm a little lopsided on my real estate.
Yeah, you're real estate heavy.
Yes. What I want to do, I'm real estate heavy. So what I want to do is I'm looking for an investment to take that $100,000 and, of course, with low risk and, bump it up a little bit. I have my own business, so I have no retirement or Keogh account or 401k or anything like that.
Keogh. Oh, dude, you're dating yourself with a Keogh.
Wow, that's really going back.
Wait. But you did something. You said, where can I put it that's safe? Tell me what you're thinking about. What do you don't want it to fluctuate at all in value?
Well, of course I want it to grow.
Well, yeah, we all want that.
You want safe but growth, safe but make a lot of money. Is that what it is?
Yeah, safe but
just
growth.
want to make sure.
You can see it. Excuse me, as you can see at my age, I'm 68 years old. I got $100,000 cash. It's not a lot of money.
Right. No, I agree. But the other thing is what the reason we laugh is because we've been doing this for a long time. And the number one request is, I want to make as much money as possible with no risk. Well, the reality of as much money as possible with no risk is good luck. You'll get 1%.
There's no such thing, basically, at the end of the day. Sorry. We wish there were.
Yeah. Okay.
But there isn't.
So what you have to decide is, what's the trade-off? What are you willing to give up? Are you willing to accept a degree of volatility? And then how much volatility are you willing to accept before you panic out?
And how long until you need any of this $100,000?
That's part of it, too. What I would suggest you do, because this is going to help you get the question answered, go to TalkingRealMoney.com. Take our risk quiz. Less than 10 minutes. It will give you an idea of what your risk tolerance truly is, and actually a suggestion for the proper allocation at that point.
Tom and Don are talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
Reality radio for a really great future. We're talking real money.
You need money to enjoy the future, and we want you to learn how to start not just saving it, but investing it, not gambling with it, because you don't build wealth by gambling. You don't build your wealth by gambling. You may build someone else's wealth.
You might get lucky.
Yeah, didn't somebody last night?
Powerball.
Yeah, they won $1 billion before taxes.
All right. One of our employees threatened me this week. Said, "I win that." I was like, "Yeah, okay, bye, good luck." We'll get on with it. So, sorry.
Given that you're on Comcast,
frozen again.
Yeah, the stupid sound thing. I hate Comcast. Would you please find another service?
It's not like a lot of people wandering the neighborhood.
All right, just go get some fiber optic cable and walk down the hill and plug it in at somebody's house.
We'll get into the stream down there.
Somebody. 855-935-TALK is our phone number, 855-935-8255. And Chris, welcome to the show.
Yeah, I've been playing with spreadsheets and trying to compare and find advantages between a Roth 401k and a traditional 401k. As far as I can tell, they're identical, other than it's a pay me now or pay me later type of scenario. Is there an advantage of one over the other than potentially your taxes might be lower in the future?
Okay, there you go. You just hit on the big one. Here's one. Let's just play a couple of scenarios out. You're in your earning years. You're later in your earning years. You're in the peak of your earning years. You're getting a great salary. You're in a very high tax bracket. Now, in that case, it probably makes sense to do a regular IRA unless you've saved multiple millions and you're going to be in that same tax bracket in retirement. That's a case where a regular IRA makes sense. If you, though, have been a great saver your whole life, you have a relatively steady income throughout that life, you've put lots of money away, you're not in a particularly high tax bracket, then the Roth starts to make more sense. But here's what we suggest. Do both.
And I think here's another thing to think about. If you're under the age of 40, I think it's a no-brainer to split it between Roth and regular 401k, for example, because it gives you certain you can withdraw from one or the other. By the way, what Don just mentioned about taxation, remember now required minimum distributions don't start until age 72. So you're not required to take anything out until then, which offers a little bit of mix around. And by the way, I think that's something they'll continue to push back as people live longer. So you're right, the figures. But again, if you're young, I think it's a no-brainer. I think it's when you start to get to be 50 plus that you really got to start thinking about your, as you say, pay me now or pay me later scenario.
Yeah, I did the same thing. I spreadsheeted it. I don't consider it playing though, because I hate spreadsheets. And I actually did a rough plan for my future. And right now I'm in much higher earning, the highest earning period of my life. And 5 years from now, there's no chance I'm going to be anywhere near this bracket. So it makes more sense for me to take the tax break today and pay it later, or maybe later on convert it to a Roth when I'm in a lower bracket. Maybe. But probably not. So that's why we often say, just because you don't know the future, it's, do the Solomon thing. Cut the baby in half.
Yeah, and a lot of CPAs are always going to tell you pay no tax before you have to.
Yeah. So 6 one way, half a dozen the other way. We really don't have a preference. I mean, let me just tell you this. Let me add to that. If you are 18, 19, 20, 21, 22, 23, that's when it's an absolute have a Roth. No doubt about it. Put it all in a Roth, because there's no way you're in a high enough tax bracket for that tax deduction to benefit you. If there is no gain to be had from the tax deduction, everything should go into the Roth and let that be the part that grows forever.
And someone just texted me also was asking about limits. Of course, there's a income limit for a household. I think it's somewhere around $190,000. If you make more than that, you cannot contribute to a Roth IRA. You could always contribute to an IRA. It just might not be tax deductible.
Right.
Put the money in. That's okay.
Right. Yeah. That is, again, within all of the, Tom and I were talking about this earlier, the fact that why is all this government stuff so confusing? Why don't you just say you can do a Roth IRA or you can't do a Roth IRA and not have all these other options? Or
just give me the shot.
Just give me the shot. That's what I want to do. Give me the shot.
Come on.
I am 5 months too young.
Yeah, I know. You're just missed out on the good times. So
855-935-TALK is our number, 855-935-8255, or send your questions in at talkingrealmoney.com anytime. And please get some help before you get in trouble.
Tom and Don are talking real money.
Retire Meet has gone both national and virtual. Join Tom and me along with a host of other retirement experts at Retire Meet America 2021. Reserve your place now at retiremeet.com, retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
Because there's really very little that's more important than talking real money. 855-935-TALK is our number, 855-935-8255. Oh, Tom, I found the perfect picture for your Saturday podcast.
Yeah, what is it going to look like?
No, it's funny. You're just going to have to look and see it once I post it after the show.
And by the way, I talked to Chuck this morning. And I want to say thank you to Chuck. He's listening. He told me how many people he's recommended the podcast to. So if you can't hear the show, we take the show, make it a podcast. We do other podcasts. There's basically almost something new from TalkingRealMoney.com every single day.
Except Sunday. That's the day we take off.
The day off.
That's it, one day. 855-935-8255 is our number. You can call that number 24 hours a day, 7 days a week, too. That's pretty handy. Hey, Patty, you're next. Welcome to Talking Real Money.
Hello. I heard you
Hi.
talking about the vaccine, that you're just not quite there yet. I'm getting my first one on Monday, so I'm pretty excited about that.
Oh, congratulations. I'm so jealous and yet happy for you.
Do you need a friend? Do you want me to drive or anything?
I wish they would give it to a friend. I take a friend. It was so hard to get an appointment. It's very hard. If you didn't jump on it immediately, you could not get one. So, it's not easy. But let's get to my question. Every year for birthday and Christmas, I've been putting $1,000 into an account for each of my grandsons, and I have it in Vanguard Total Stock Market. Is that the fund you would recommend?
Yes. Is it the Vanguard
Total World?
Total World?
Or the Total Stock Market? It's the U.S. version then.
Yeah.
Yeah.
I'd rather you have the word. I'd rather you had the. I'd rather you had the global one, but
Popeye or something. No.
Well, what I could do is 50% each, maybe. How would that be? If I put 50% of the money in each.
Again, but then you're just owning.
But then it's hard.
You're overweighting to the U.S.
Because bear in mind that the Vanguard Total World only has about 35% international anyway. It's not 50-50.
Okay.
So then you're just overweighting again to the U.S. Let's just step back. Number one, that's great what you're doing. Mm-hmm. Number two, the way you're doing it is terrific. Number three, it's okay. It's just we think it would be a little better to be in the Vanguard Total World. It's not going to change anybody's life. You'll be all right.
Okay. And then I was listening to you for the first time just today, and I heard you say something about just a fund for grandchildren in general. I thought, well, maybe in addition to this, I should be putting money in another account for them that's not a 529, but it's an account that they could just have, for their retirement. Would you recommend that?
Well, if they have earned income, yeah.
No, they're little.
They could do a Roth IRA.
They're little. Yeah, because, and there's nothing. Here's what I would suggest you do, because there's really no benefit. Just in your own investment account, set up a second account that's I'm earmarking this to give to the kids when they're older account.
Now that's smart, like a bucket of money that you do not expect to spend.
But don't give it to them.
For others. That would be more aggressive. Yeah, the problem we see is that people wake up then at 18 and they go buy a car instead of doing something useful. That's why I like the 529, because it's telling them, I have a belief in education. I'm funding this partially for you. Use this money for that. And that's why I don't like the UGMAs or the other stuff where people can just go get the money.
And I misspoke, Patty. The international portion of the Vanguard Total World, or the VT, is VT Wax or VT is 44%, not 35%.
So you're getting pretty good diversity. Yeah, we use one over the other, but Absolutely. You're okay either way.
Thanks, Patty. Appreciate the call. 855-935-8255 is our phone number. And up next is Brad. Hi, Brad. Welcome to the show.
Good afternoon. Yeah, my question.
Hey, Brad. What's up?
I'm going to be coming in from an auto accident, probably several $100,000 worth of money. I'm in my late 70s, and, at this age, probably too late to invest in anything. What should I do?
This is money you're not going to need to take care of yourself for the next, hopefully, 20 years?
Yeah, I hope 20 years. That's what I feel like now. I hope I can live that much longer. I mean, I have no way to know that, obviously, ahead of time.
No, but the question is, though, are you going to need to use this money to help subsidize your lifestyle?
Income.
No.
And what would you eventually, where do you see this going upon are you going to spend any of it between now and when you are no longer shuffling along on this mortal coil?
Yes, a little, to, maybe help some friends a little bit, but I'm not going to be giving a lot of it away. I might perhaps set up something for a educational scholarship or something like that for some of it.
Yeah. And then, I mean, again, so it depends then on how much work you want to do. Don McDonald, VT Waxing Poetic today.
Yeah.
I would just go own the one fund for the globe it's just easy.
No,
or you can get fancier if you want.
Well, because he might be doling it out and giving it away and all of that stuff, I would probably, because it sounds like it's enough money that you need to sit down with a tax advisor or an estate attorney and, figure out where this is going to go and to whom it's going to go, and start that process right now before you start figuring out where to invest it. If some of it's going to go to charity, then you may want to just go ahead and take advantage of that now and move it in. It just depends on your tax situation. So you may not have to think about that. And then whatever is left, you split up into, or maybe use a balance fund. I think going with a Vanguard Total World might get really scary when the stock market tanks at some point, which it will do. I just don't know when or for how long. So I would start first. I think we're starting backwards. Don't invest it yet. Leave it in the bank. Get a good tax attorney or a state attorney or a tax planner. Figure out what needs to go out of your estate now and how that might benefit you today.
Yeah, and he could be charitable now by giving some of it away today.
Exactly.
So what you're saying is have the plan first.
Have a plan, then figure out where it's going to go.
That's always good advice under any circumstance.
And quickly, Brad, before we run out of time, Shelley, you're up. Welcome to the show.
Oh, hi. Thank you.
Hi, Shelley.
Hi. So I just received a settlement from a car accident. And I'm 58 years old. I've got $50,000 in my hands that I want to put in something that's kind of a standalone investment. we've got our retirement. My husband's got the 401k. We've got a family trust going on. But this I would like to do by myself, so I'm wondering what you would recommend doing with that.
Boy, we're going to sound like a broken record.
Yeah.
We really do. We start to sound like a broken
Wait, I
record.
bet you want to keep this money sort of for your own retirement then, or for your own gifting, or tell me more about the purpose of the money.
I am self-employed, and I have been self-employed for years, so I really don't have any kind of a retirement fund just for myself. So I'm looking at probably at least 10 years before I need to touch it, and I'm wondering what you would do with that. My husband says go for it. So,
and are you in a high tax bracket between the two of you, or a low tax bracket?
No, I'm not high.
Okay.
We're pretty
because what I was going to say, at your age, you still have a lot of time. I would probably take some of it and fund my Roth IRA this year.
Which you could do for 2020 and 2021.
Which is
$6,000 a year.
Yeah, at 50 years.
Each year.
So,
I mean, you could
put
just
12,
go set up a Roth. Yeah.
And set it up with either go to Vanguard and use, if you're going for it, use the Vanguard Total World stock index, or create a portfolio based on your risk tolerance. Go to TalkingRealMoney.com and look at our two fund solutions and use either Vanguard or Fidelity or Schwab with their index funds for that. It's really easy. And then take the risk quiz.
Talking Real Money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey, you know who I heard from today? The great Paul Merriman. He's excited to be at Retire Meet America on February 20th, which turns out to be 1 month from today. And
we're letting Paul come back again?
I know. He's got, what else he got to do? So he's kind of like me. He's a worrier. He was asking about this and this and this a month ahead of time, which would be similar to what I would do. Not Don. Don would wake up the day before.
I'm fine. It'll work. I have faith. It'll work. I'm just checking to see how many people have signed up already.
How many?
510.
And we have a month more. Don's prediction was 1,500, and he very well may be right.
I think I'm getting close.
You should be one of them.
Yeah.
If you're listening.
Yeah, it's really easy to sign up. Go check it out at retiremeet.com. And by the way, you can spell it either way. If you think that Retire Meat is about animal flesh,
cows,
spell it MEAT. It works either way. Some people have tried it. They went, yeah, it really works. Go to retiremeet.com and sign up. The tickets are, guess how much?
Free. Zero.
You just
nothing. Nada.
Really ruined.
I know. I'm the number 2 guy. I got to get a shot in here somewhere.
All right. Retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.